All right. Hey guys, we're gonna be casually talking about some crypto stuff, wallets, DeFi, and NFTs, and we'll close by the hour. So I do need to go at the end of the hour, so it won't be as long Q&A. And hopefully you guys are asking throughout the presentation. This should be interactive, as we don't have a lot prepared. It's just something that I'm very personally interested in, very excited about. So we're going to start introductions, typical stuff, setting up your wallet, which I think is sort of a precursor to do all these other things, including accepting Bitcoin through your Bitcoin mining investments, if you haven't done that already, and then buying an NFT, and like to end it with describing and telling you guys about our own Tozy NFT. Really, it's a collaboration with several of our investors and friends on an NFT project idea that originated a month ago, and now we're launching in a week. Love to get everyone included on that if you guys are interested in. It's an exciting project, and hopefully that will have a lot of legs. Anyways, I'm pretty sure everybody knows about me. It's not, I don't think this is a lot of new people lately, but I've been an investor in real estate as well as crypto for the last few years, and real estate for longer. And I'm very excited to really embrace the space of crypto, because I think this is going to have a lot of future applications with real estate and investments in general. So, setting up a wallet. I think the easiest answer for everybody is to just set up a centralized exchange wallet. We call it centralized exchange because it's a wallet that essentially you can go on Coinbase. It's institutionally friendly. You can actually hold a self-directed IRA with a Coinbase account. It might not be technically possible to do it with a hardware wallet or just owning like gold in your basement. I think that's something that there's a case study that one of our good investor friends told us about recently, where that could not be, a self-directed IRA holdable asset. But in an institutional central exchange like Coinbase, it's pretty easy. It's like, opening an account with Chase or a bank. You go to coinbase.com and then you set up an account, and you can deposit ETH, Bitcoin, etc. And there'll be separate wallet addresses for each of those type of cryptocurrencies, because they're different protocols altogether, and they store it on their exchange. You don't really own it. It's centralized, just like a bank, Chase Bank. You still have to get permission to take it out and put it in. There's still that central layer, but it is easy to use. And just like a bank, if you lose your keys or your security, your security codes, you can just prove that you're Eng Tang or whoever you are, give your social security, etc., and you have access to it, just like any bank account. So I think it's probably my recommended thing for most people to just have a Coinbase account. Coinbase Pro allows you to on-ramp dollars fairly easily, as there's no exchange fees on exchanging dollars to USDC, which then you can withdraw to on-chain or off the exchanges. If you want to then participate in buying NFTs or DeFi or anything like that. Now, what I do and what most people do in crypto is probably have a hardware or a software wallet or both. And hard and soft wallets are essentially similar things. They're essentially just a wallet that you personally own. It's a identified public key. You have your own security code, and you essentially don't have to go through any exchanges. It's like having your own private lockbox, except that it's not held by a bank or a central exchange. But if you forget that access, you should know yourself. If you're the kind of person to forget that kind of access, maybe don't set that up. There's probably, I would imagine, hundreds of billions of dollars of assets of crypto that are just locked forever because of dementia or forgetfulness, or somebody losing their public key. I have definitely had that issue before. I know one of our investor friends, I believe he's on the webinar, I won't call him out, had that issue, and you can actually hire somebody to actually unlock it for you in some cases. I'm not sure what that process is like, but that's something that you get a chance to do. So I know I have a wallet that I set up probably 10 years ago or 9 years ago, a Bitcoin wallet. And I don't think I remember the key. I know it's on my hard drive, and I was waiting for Bitcoin to reach like 100K before I okay, now I should probably figure out how to do it, because I want to be surprised. I know I have like several Bitcoin in there. I know where all the information is. I want to surprise myself. Maybe that's the best use of investment advice. It's not really investment advice. It's just mostly my own little personal thing.
Yourself later.
Yeah. But hardware and software wallets are essentially your own private thing, your private lockbox, and it's easier to do. It's something that I use a lot. And they come in form of, for hardware wallets, Trezor and Ledger are two good ones. I use Trezor, but I have lots of friends who use Ledger. Essentially, it's just a hardware wallet. It's a hardware application that you plug into USB-C or USB-A to your laptop, and then you have to enter the PIN. And if you lose that, then you lose it. Another idea for a hardware wallet is essentially a phone that doesn't have internet access, because that's essentially what a hardware wallet is. And you can actually just install a hardware wallet on there, and as long as it doesn't have internet access, no one can then take it and lock it. Now, I use software wallets like Trust Wallet or Blue Wallet, and my Trust Wallet is, you can set up a Trust Wallet and they'll give you all your public keys for all of these protocols. And the good thing with these is that if anything happens on my transactions, I can see a notification on my phone for what happens in terms of if I'm trading, or if I'm buying something, or if somebody's sending me money, I see it as a notification on my phone. The bad thing is, if somebody ever steals my phone and unlocks it somehow and gets to my password, protocol, etc., they can do whatever they want. They essentially have full access to it. So I try not to keep too much things on it. Although, I think that's something that you should always think about. The last thing is a software wallet, but it's also a hot wallet, is MetaMask. And it's something that you would need to probably set up. I mean, there are other solutions here, but MetaMask is the most popular one. It's the one I use to essentially engage in DeFi and Ethereum and in NFTs. And it's a fairly simple thing. It's a Chrome extension. You can just go to MetaMask website and then download it. And it's pretty easy to set up afterwards. And if you have your own wallet address or your own wallet, you can just set that up after you solve MetaMask, or if MetaMask is your first time setting up a wallet, you can do that. Now, MetaMask will not let you hold Bitcoin. It's not a Bitcoin wallet. It's usually an ERC20 wallet, which is a Ethereum protocol. But that would probably be the easiest way to then get started on all that. Well, that simple little intro to setting up wallets. I know that we didn't go deep into it. I'm happy to if anyone has any questions on it. Otherwise, we'll just move to the next topic.
One of the things that I want to share as you're setting this up, they'll likely ask you for a picture of your ID or a picture of yourself. So if they're asking you for those things, don't be surprised when they do that.
Yeah, a lot of times it's like KYC stuff. So know your customer. They want to make sure that they're taking the proper data protocols as they want to be compliant with federal regulations. And while a lot of times this isn't being shared with any federal authorities, it's just making sure that just like opening a bank account with Chase or anyone else, they want to make sure that you're not a terrorist. It's the main thing. I think that's the main reason why we have KYC laws. And also then to maybe even pay taxes when those regulations get more ironed out. And by the way, I'm happy to answer any tax questions. It's an evolving thing, but if you transact on Coinbase will not report your transactions. Like if you were buying anything on Robinhood or Cash App, like crypto, they will report your transactions. So FYI, it would just be on you to then file tax on it. And of course, if you're doing it on your MetaMask, who knows?
And this question will kind of lead into what you're going to talk about next. What wallet are you using for DeFi?
I'm using MetaMask. It's a hot wallet, meaning that it's always on. As long as I have my computer, I can then apply. I can use my DeFi applications on it, and I think it's a fairly easy way to transact, as long as you're not clicking any buttons that you're not aware of, or as long as you're not engaging any protocols, and being very careful with those kind of things. And it can seem very scary because of how easy it is, and I'll show you how easy it is to do these things. But that's why I use MetaMask, because in general it's a fairly safe protocol application to use as an extension. We have somebody who asked about, is Coinbase wallet sufficient to hold BTC distributions? Yes, it is. You can just hold BTC distributions through your Coinbase wallet, and then just keep seeing it collect. It might be a very good way to then have control on liquidating or selling your Bitcoin you've earned, or holding it, and potentially even moving it to other protocols or other wallets that you own yourself. All these things aren't, as long as you have something that you can, Coinbase is actually very easy, and I recommend it for a lot of beginners. But you can also then off-ramp, right? It's good to on-ramp, which means that how do you get money from regular economy into this magical universe of crypto? Going off-ramp means how do you get money from the crypto economy to dollars, so you can spend on other stuff that you want to. Coinbase is generally a very good one for on-ramping and off-ramping.
So Ang, you're using a combination of MetaMask and a hardware wallet, is that right?
Yeah, I'm using a hardware wallet for my long-term holds, but I'm using MetaMask for a lot of, for the majority of my DeFi stuff.
Okay, great.
So DeFi rating. I think I'm gonna try to, DeFi is a big, broad topic, and I'm going to start with just some of the basics, not get into, all these other things. DeFi Llama is a pretty cool website, and I have my MetaMask installed here. I'm on MetaMask. It's like 51 each. Just sold something for a profit. It's hard to make a profit in this market right now, but just trying, So I'm on DeFi Llama. It's an interesting protocol, but it's a good way for me to then think about how to explain all these different applications. DeFi, essentially decentralized finance. And this is sort of just a brief on DeFi. and I can go deeper into it, and it's a second layer, maybe a subsequent presentation. But I want to just highlight some of the major applications of DeFi and how I would use it, or how I do use it. And when I think about DeFi, I think about it's finance, right? I used to work in finance. I used to work in investment banking. I use financial products. I've worked and invested and consulted with fintech companies. All those are financial products. Everything you do at a bank, it's a financial product. So decentralized finance essentially is mimicking, taking what we use in the financial world and doing it in a decentralized way, where the main middleman isn't the bank, but it's a decentralized finance protocol that is acting like the middleman through the use of smart contracts. Smart contracts are code that allow you to have trustless, which means that there's no middleman to say, okay, you send me 10 ETH, I give you X amount of dollars. It's because that these are all written in code. You can do that seamlessly without having a middleman. So in the future, my imagination would be that there won't be a need for a lot of middlemen nowadays in the future. Even Goldman Sachs said that DeFi is really the future of finance. There will be less likelihood for you to need bank savings accounts or banks in general to have even escrow or title companies, as all these things are essentially providing trust as a middleman. So trustless system, meaning that it's not saying that you'd have no trust. It's just that there's no one person that's guaranteeing that trust. It's written in code, which cannot be broken and it can be transparently observed. A lot of esoteric statements. So I'll just go into really, what they generally use for DeFi, and also talk about. And it's a pretty cool website here. I also want to highlight all the chains on essentially on DeFi or just in general. I'm not exactly sure if they're just highlighting total value log or market cap, but these are the most popular chains to use DeFi on. Chains are essentially its own little ecosystem, its own little business. One chain that you don't see is Bitcoin, because Bitcoin does not support smart contracts. So Bitcoin is not really its own chain. It's really, for me, it's digital gold. The rest, Ethereum, Solana, Binance, Avalanche, are applications. They're the App Store. Ethereum is really the App Store. You can build apps on it, and DeFi protocols are essentially apps that someone builds a Web3 application on, and you can then engage with it. And I'll show you a few examples of that. But the main one is Ethereum. Binance is far distant second. It's also kind of a centralized one. Solana is an up and coming one. It's made major headlines recently. Avalanche is something that I'm pretty bullish on as well. And I've been on all these other, most of these, essentially a lot of chains here. But you can see that it gets pretty bifurcated or pretty big. So one of the major use cases for DeFi is DEXs, or essentially decentralized exchanges. We talk about centralized exchanges, Coinbase being one of them. That means that this market maker, I'm going to sell my Bitcoin and my Ethereum for this amount of money, and I will make the market and I'll provide the liquidity for it. Decentralized exchanges means that you're buying off these centralized exchanges, and it's all decentralized. There's no market maker. I mean, the market maker is the application layer itself. Uniswap is one of the more popular ones. Essentially, I can go on Uniswap, and I'll go here. And I can go to, Uniswap, and I can see how much transaction volume they've had, $3.6 billion in the last 24 hours. You can trade Ether or whatnot, and it's essentially just a simple exchange where you can buy and sell things without a Coinbase or any centralized exchanges being in sort of a middleman. That's a fairly simple way. DEXs are really a common thing at this point. It's not to really take advantage of DEXs in terms of making money off DEXs. You can add to the pools, and I'll show you one of my favorite ones here would be SushiSwap. You can lend, you can pool, let's see if I can farm. So basically when you add two pairs, and this is going to get more technical than I would want to talk about in DeFi. In order for there to be liquidity on anything, there needs to be one token that's paired with another token, and then you add those two into a liquidity pool that allows people to then buy and sell one to the other, trade one to the other. And so for new coins that are coming up, they're going to give you a fairly high APR because they're going to want to incentivize you with rewards. So these are very high APRs. Of course, they're like, a little bit less common pairs. I think the most common pair is probably like ETH, BTC, maybe. No, is that? I haven't used Sushi in a while. Yeah, so these here, TVL, yeah, BTC, ETH. You can add that. People are always trading between BTC and ETH. In this case, wrap BTC and wrap ETH. There's nearly $400 million in TVL, total value locked. That means that it's a very deep liquidity pool. That liquidity pool means that this is that's how much can be traded that without really impacting the price, and that's very important. So it's, any these, when you get to smaller liquidity pools, that's when you buy big amount, it will impact the price a bit much more than you would want. You can get front run. So DEXs aren't really the most interesting part of DeFi, although it's the most common application. What I think are the more interesting parts of DeFi is lending and money markets. And money markets are one of my favorite ways to leverage DeFi. So this application is Aave, AAVE. And every time you enter the app, you're connecting your Web3 wallet, in this case, my MetaMask wallet, to the protocol. And in this case, let me see if I go to the Ethereum one. The way money markets work, the way these lending protocols work is that you make a deposit, just like with your bank. And so I want, and it could be DAI, which is a stablecoin, or it could be ETH, Ethereum, or it could be any of these other protocols. And then you can make, you can get a deposit APY. And in some cases, you get an incentive APY because the protocol itself is trying to incentivize usage. Just like if you went to buy, get a credit card, you would get extra points. So like Avalanche is, is incentivizing a lot lately. So if you're putting in wrap Bitcoin, you're getting 0.5% in deposit APY, but you're getting 3% essentially from Avalanche tokens. And they have $760 million deposited. And then you can borrow. So what I've done in the past is to essentially deposit coins that I want to hold on long term, that I don't want to sell, that have big collateralized value. For example, I can do wrap Bitcoin, And in this case, I can make have a maximum LTV of 80%. So what that means is if I put $100,000 of Ethereum on this protocol, I can then borrow 80% of that Ethereum, which will allow me to borrow $80,000 of some version of another coin, usually a stable coin that doesn't go up and down. And the risk here is, of course, if you go beyond a certain threshold of LTV, in this case 82.5%, you get liquidated. That means they will sell your collateral position, your ETH in this case, to then pay your borrowed position. If I was borrowing USDC, which is US dollar coin, you would essentially lose out on that and pay a 5% liquidation penalty.
What kind of interest are you paying when you borrow against it like that?
Depends on the protocol. It's a variable rate. So for Aave, you can see that I could be borrowing at 1% on wrap ETH. And now I'm borrowing an asset that might go up in value, which means I have to pay more. So that's not necessarily a great asset to borrow. The better asset to borrow is these three, the most common three coins that is dollar denominated, DAI, USDT, USD. And then in some cases, I'm borrowing it for 4%, and this is a variable rate. You can see that its variability has gone up and down depending on how much people deposit and how much people borrow. It's all kind of algorithmically determined. It's never really set. There's no person saying that, oh, it's gonna be 4% today, it's gonna be 3% today. It's gonna be depends on, it's gonna try to incentivize a certain amount of people to deposit amount in a market that goes down a little bit. These all kind of go down because people are trying to put all the money into stable coins and have hide for safety. So I'm in this other protocol, which is, I think, a little bit more new and more interesting. Let me go to my other accounts. Yes, I have multiple accounts with MetaMask. And
a quick question here while you're scrolling through here. Are the Aave money lending safe? Is there a scenario where Aave gets bankrupt and we lose our crypto?
So that's a great question overall. It's what we call protocol risk. Is it a risk for hacking? In some cases, there have been hacks. I think at a certain level, you get enough audits, you get enough protection. I'm not saying that these things can't change in the future. Biggest question would be bank runs and other stuff. Someone can steal money from a bank. Is FDIC insured? Aave has layers of protection here, and you can see how it works. People can take flash loans, which actually is a feature that allows people to just take a very big loan and then change the price of things. More technical than I wanted to describe. I'm on Blizz because it's a new money market, it's high incentives. You're seeing that I can get deposits for a fairly good amount, but my payments, if I was borrowing USDC coin, I'm actually borrowing for 8.45%, which is not great. You don't want to pay 8% for borrowing, but I get incentivized 17%. So actually, for every dollar I borrow, I actually get paid to borrow. A weird concept, but that's something that I have. Let's see how much I have, like 644,000 collateral value. I'm only taking at 52% of my LTV. I could go up more. And this is my collateral I'm using, mostly ETH and Rapid BTC. And Rapid BTC is an ERC20 token where you can go to a protocol like Badger, Badger.com, and then earn interest or you can then deposit BTC. So if you were going to change, I always get changed. Change it back to Ethereum. This is Ethereum, and bridge. Essentially, add in BTC. So you can actually add BTC. If I want to add like 1 BTC, you would get this much Ren BTC, which is a version of a BTC that follows the price of BTC. You would put, you would, essentially bridge that over. You add your address, your knowledge, blah, blah, blah. And it would essentially allow a Bitcoin to then live into the Ethereum ecosystem, which is 2 separate ecosystems altogether. So that's how you would bridge Bitcoin into Ethereum to then use for as an asset, or just DeFi in general. Or you can actually just trade your Bitcoin for wrapped Bitcoin on Coinbase. That's actually probably the easier way, and probably the cheaper way. And then send your wrapped Bitcoin over. Yeah, that's.
So this is going pretty deep. If you had to sum up how money is made in like 2 sentences, 2-3 sentences on these DeFi protocols, what would that summation look like?
Yeah, so it's essentially like everything else you would think about banking. It's investment banking. It's somebody providing collateral. Somebody wants to borrow some amount of money, and they can go and invest it wherever they want. And if they don't, at least you have the collateral. It's like literally you're not signing any contracts. I can just get $100,000 from my money, right? It's my money. I put the money in, said that I'm borrowing against my money, and now I have more money, even though I still have my initial deposits. But if I don't pay that money back, then in this case I borrowed $240,000 of USDC at a high APY. You can see that it's you can see, okay. Anyway, so you can see that it's going up by the second. It's all real time. I'm also, making money on these by the second. I'm also earning, a good amount of daily returns for my, my little governance token here, $8,000 a day. Not bad. I should claim this. Yeah. So lending is really one of the big things, right? You think about a bank, you go borrow money against an asset. It's usually borrowed against, a business plan or an asset or a future thing. Because there's no like one person banker that you try and get money from. You have to say, hey, this is my asset. Let me borrow from it. And I've been doing that since Ethereum was like 1,000, and my asset goes up. That allows me to borrow more, and without selling my Ethereum. So that's sort of, I would have to then first believe that Ethereum would go up. That's on you guys to think about, but that allows me to really think about how to get the most out of DeFi. There's other applications of DeFi, yield, and a lot of the yield is basically mostly like liquidity staking or other stuff like that. It's a little bit more in depth, especially since we have like 20 minutes left. There's insurance, there's options trading, there's margin trading, and there's basically everything you can do with every other thing that you can imagine online. You can e-trade, everything that you do in financial systems, it's all being done in DeFi. You can buy Forex, you can buy gold, you can in representation. You can stake your Ethereum, you can earn yield on it, you can stake things, which is for most coins, it's actually proof of stake, not proof of work. Right now, Ethereum and Bitcoin are proof of work. It allows you to take power and energy to create something or to validate nodes, transactions. But most new coins nowadays are proof of stake. And that's actually just validating transactions with capital, or really staking your coins to validate it.
How do these platforms differentiate from platforms like BlockFi?
Yeah, BlockFi is it's a centralized exchange. and they're using your exchange, and then there's actually a DeFi / TradeFi that's easier than trying to set up your own little thing on MetaMask. But here I could go to BlockFi. I could deposit, money. Deposit. Here's a calculator here, or maybe it's Celsius, one of those things. But it's actually, these APYs are like probably a much lower version of what you can earn. These leverages are much lower, usually 50% leverage. These rates are much higher because it's a middleman, right? BlockFi, they're middlemen. Well, they use DeFi applications. They essentially are like DeFi for a lot of purposes. It's still, it has a lot of institutional backing to it and other kinds of regulations that makes it a little bit different. But it's essentially the same. But you can do everything BlockFi does on DeFi and Coinbase on DeFi. And yeah. So. And I know somebody's asking, how does DeFi perform during the bear market? And I think in general, when people are euphoric about the major coins, these other coins go much higher, and vice versa. So for some of our DeFi applications, they go down a lot more than if you were in these bigger coins that are down 10%. These other coins will go down 25%, but vice versa will happen. But there's always little edge cases of each one. This month, the market's been down overall, but I'm probably up like 5%. It's probably down like 10% overall. The market is. So it really depends on how you're using DeFi. So I think the main thing with DeFi is that it's going to replace everything you're familiar with banking. If you go and deposit, you make money. If you deposit money, you want it held for safety, you want to have it earn interest. If you want to then borrow money, it's all possible. So buy an NFT. So we're going to go do this correctly.
That was literally just a question that somebody asked, so this is timely.
It's just the main way. There's two ways to buy NFTs. One is to mint an NFT. The other way is to then buy an NFT. It's just slightly different. Minting an NFT is essentially just buying the original release of an NFT in a smart contract that gets from that original contract as original price. To then buy an NFT, you should probably, the most common way is to use OpenSea, not the only way to do it. So you can go to OpenSea with your MetaMask and then buy an NFT. I'll just quickly highlight that with my own wallet. I'm not gonna buy anything because I think the market's down a little bit. So with my own, I'm gonna go to, don't look at my Pooptopia.
Come on, you don't have enough collected there.
5,000. Let's look at the most interesting NFTs right now. Roof Game it's insane. It's fun. It's a fun little thing. So it's a Bored Apes down a little bit. I think so. Recently sold mine for $250,000. That's a good profit. You gotta take profits now. Then don't let anyone else think you otherwise. So I'm gonna try to buy the cheapest and Bored Ape. Okay, looks pretty good. These I'm gonna look at buy now, and it's as simple as clicking a few buttons. Definitely don't do that. I actually do have to buy it, so I'm not gonna click them. Actually, I'll have to then confirm on this case, confirm checkout, you confirm with your MetaMask wallet, just like you do on any applications. If you trade on SushiSwap or Uniswap on a DEX, you would do the same thing. And then it would confirm, take a few seconds, boom, you have it on your wallet, and then you can transition it to a hardware wallet if you want, or you can do whatever you want, where you can sell it, relist it. OpenSea does take a 2.5% cut. But that's a simple way to just buy an NFT. If you want to go into like how to buy an NFT well, and how to like look at sniping and other types of ways to engage your NFTs, probably a deeper discussion. So I think you have a few questions I want to get into first. Any tips on how to save insane gas fees on Ethereum network? So Ethereum is really for, at this point, it feels like it's for the wealthy people, because if I go to gas, well, it's not gonna be fun. What is it? Fees at what? Right? What is it? Fees, I guess. Yes. It's not gonna be fun, guys. It's gonna give me. Okay, so I spent. No, well, this isn't accurate. I definitely spent way more than that.
I was gonna say that's not bad.
Okay, here. Okay, yeah, that's a lot of gas. No, $370,000. This is all expenses. I'm gonna write this off as a tax thing. Get a drink right here. Don't look at me. So that's a lot. Use 386 million gas spent. Ethereum, the rate that I would try to save on gas is to observe when it's less likely that it's high. It's actually not that high. Although when I first started using Ethereum, right around the bear market of July, June, or at least buying NFTs, it was around 10 to 20. Now it's pretty common that it's 100, 200. The way that I would do it is if I was going to buy something, I would just force that the maximum gray fee and make it a low number. It'll just be stuck for a while until it reaches that number, and it might never reach that number. So you just gotta understand that you will be back in the line. If you're not doing anything urgent, you can do that. And the other way is to go off Ethereum, which I'm not on Ethereum a lot. That's pretty good. I close that screen. I don't know. I'm gonna look at the screen again. Okay. All right, guys. Thanks for everyone for attending today's webinar. I would like everyone to hear about our first NFT that me and Ryan are working on. Funky NFT. It's a collection of 10,000 NFTs that our friend Nick is designing, and this is one of the versions of it. Essentially, as an homage to art, music, and it's just funky little characters, but with amazing utility. And I'm always thinking about utility. So, yeah, I think we're going to be developing a new utility system that. Let's see, we go to that. Yeah, so we want to offer early access. So anyone who wants, we can get you whitelisted for those who don't know what that means. That means you can then mint the NFT without too much competition or any competition, and you can get early access, essentially guaranteed spot. You just have to pay for it. It'll be 0.05 ETH, 0.05 ETH, right? And you can get essentially exclusive access to this NFT. And we have a Discord. It's all live right now. Feel free to join us. Click this button. But the whole concept of Funky NFT is it's a Chrome extension that we're developing. That it's like the honey / root of NFTs. When you mint something, and really going the deep end here for anyone who might not be niche to any of this at all. When you mint something or you buy something, you're adding value to the NFT ecosystem. So we're gonna give you points for those actions, this little extension, and through those extension, that point, so you can just click here, click a button there, mint. You can earn points, and it'll be automatically calculated. I'm calling it Funky points. Still working on some of the economics of it. I'm working on red paper probably in a few days. But we're going to be launching a lot of interesting new features to the future. And the whole point is you can get, sort of this prize redemption pool, just like, frequent flyer miles or airline miles, and get rewarded for buying and holding NFTs and minting NFTs, specifically Funky to start, but we'll be engaging with the whole NFT ecosystem so that you will get points for anything you can do with NFTs. If you've never done NFTs before, this might seem weird. If you just want to support Tozy NFT, or me and Ryan on this NFT ecosystem, really fully affiliated with Tozy. Happy for you guys to, we can help set up a wallet for you or show you how to do that. Hopefully earlier you found out. So these are the prizes. We might change them up, but hopefully we'll have a Cybertruck there so you can earn prizes to get a Cybertruck. This is the theme. So yeah, this is our new little project that we're working on. Very excited.
And quick question here. Will you be creating a fund for investing in NFT art?
I don't think we will in the near future. There's lots of funds already I have. But you have too many funds. DeFi funds comes to mind. I am more interested in building NFTs for the future. There's actually one concept that some you guys might be interested in. I will be looking into creating a DAO, decentralized autonomous organization, for Bitcoin mining. Something we have, and we call it Miner DAO. And by holding an NFT as part of Miner DAO, you own, you control the company, the DAO, which is essentially like being a shareholder, but actually being an owner of a mining company. I'm likely going to launch that end of this year, so hopefully be economically valuable for people. It's a real Cybertruck, although I don't know if that's so it will be a real Cybertruck, but of course those are we're waiting for obviously Tesla to deliver those. So in general, think of it like is reward points, for owning the NFT. We already got like close to 500 people on Discord.
500 on Discord. It just launched.
Yeah, we just launched recently. We wanted to just invite everyone in Tozy to participate, even though it's strange, new for everybody, maybe. But if it's not, happy for you guys to get introduced through us. Guaranteed we won't rug you. It might not be that great. It probably depends on our developers and how fast we can work. But I'm very confident.
I'm confident in it too, and I would say a lot of people's Bitcoin mining investments with us were their first Bitcoin mining investment. So I think it makes sense for a Tozy NFT to be your first NFT opportunity.
Yeah, very excited.
Yeah.
do I join?
How do I join Cozy's Discord?
Should we have a Discord? I know we don't have a Discord.
We don't have a Discord. This NFT has a Discord. I'll share the link if you'd like to join. I'll put it in the chat here. There's no Cozy Discord for now.
I'm in like 200 Discords. So the utility of the NFT is essentially you are a shareholder of this application. So we're building the application, and then through owning this NFT, you get extra points. And so we're building this whole ecosystem that will create value through this honey-like data analysis of people using NFTs across ecosystem. Honey being honey.com, and how it rewards people for engaging in e-commerce. So it's very broad, ambitious goals. I think we can hit it. We're working on ways to avoid scamming. So for those who use a extension, you can actually then use it as a radar to see if this NFT you're about to buy is original or it's a duplicate scam. It's actually pretty easy, like just on-chain analysis that the application will perform for you in real time. We'll have some price trackers and introduce gas savings. So actually all these things that people have asked, we're going to be introducing within the application layer to make it an easier experience buying and minting and engaging in NFTs, which I think is a very fun thing, especially if you look at it as building a community. So that's funky. Get funky, guys. Yeah. So if you guys follow me on Twitter, I talk about a lot. I talk about Bitcoin mining, NFTs, and DeFi.
We're at the hour.
All right, guys. Any other last minute questions?
I'll be sending an email later this evening, just with a copy of this recording and links to everything for those interested.
Cheers. I definitely should not have. We'll look at their website. Was it 380K?
Yeah, definitely don't check it here.
I use it when ETH was a lot less. It's fine. I'm gonna have more drinks. Have a wonderful holidays, everybody. Thanks for attending.
Suhail just asked a question. Hey, Suhail, on your question, how can we get listed on the Funky NFTs? I'm on that Discord channel. I'm Angry Bull. Just join and say hi, Angry Bull. I'll get you whitelisted.
Yeah, and we're also happy to host more of these informal, less prepared meetings where I'm just talking about stuff that I know very well, or maybe don't, and just talk about informing how to use these things, or I think that's something that I love doing. Is the Bitcoin mining different from the DAO? So the concept of the DAO, and I'll probably have another webinar on this, is it's a decentralized organization to create something. You probably heard of this news story, but they had the Constitution DAO, where they raised $41 million to buy a piece of Constitution. They failed at that, but it was a very interesting funding mechanism. That's not what we're doing here. We are using the DAO to fund creating a Bitcoin mining farm that the DAO will wholly own. So not going to be anything where it's profit sharing or whatnot. It's just wholly owned, but it's hard to get around a security layer. So it's not security. So to get past that, you have to be a DAO, you have to own it, and you can do whatever you want with it. I think it'll be a fun little social experiment. I'm hoping to launch that in the next two months, depending on how much time I have. Projects.
Real quick, have you considered starting a validator node for when ETH goes proof of stake?
Yes, I am. You don't really earn that much as a staker on ETH, 5%. I mean, it's pretty good, so 5-6%. Okay. It's 32 ETH for a node right now, and in ETH 1.0. You can go Lido, get 5% there. You can use other money markets that you can earn 2-3%. And I like money markets better because I can then leverage it and buy more ETH. I remember when ETH went to like 1700, it dipped. I just put a bunch of ETH. I borrowed against that ETH. I bought more ETH. And then I added as deposit collateral. Then I borrowed more money and I bought more ETH. Then I added so I looped it like 5 times. And because ETH's gone up 2x more than that, my collateral value has gone up and my borrow has stayed relatively constant. That's a good trade.
You're bullish on ETH long run?
I am bullish on ETH long run. I am bullish on smart developers being in the ecosystem, and I like to follow where the talent is. So I always like to see what the latest projects are. It's a technology application layer, ETH is, and so if you have great developers like in the technology, I think that's where the consumers will go, and that's what's proving out in the model right now.
All right, there we go. This was fun. I had a good time.
Cheers, guys.
All right.
Have a good weekend.